The Israel-Iran war saw the European energy markets spike at the end of last week, but the week ended with a tightly balanced market and not a big change in the supply and demand balance. So what will happen at the start of the week is probably a little bit of a corrective move, maybe a little bit of a sideways move, but ultimately the bulls are in charge for now as the war is unfolding. Hi, my name is Marcello Kolax. I am the Managing Director at Clever Markets and I am walking you through the European markets for the week starting 16th of June 2025. Alright, without any hesitation, we are moving right into it. So first things first, of course, this is just my humble opinion and not real trading advice, of course. So for everyone familiar with the Clever Markets dashboard, we are working with this right now. We are mostly bullish on the hourly charts as well as a lot of the daily charts. From the TTF, NBP, German Power, EUAs and Brent, we were all bullish at the end of last week and we start bullish at the start of this week as well. And we see that it is already having an impact on the medium term daily charts, on a short to medium term, however you want to call it, the next couple of days and weeks ahead. So the markets are turning bullish as the news in the Middle East are unfolding. And this is also very much reflected on the TTF sentiment poll. So every week I am asking my followers on LinkedIn where they think the TTF is going to go next week, and the respondents are all actively involved in the European energy markets themselves. So they're investment bankers, energy traders, portfolio managers, procurement managers, and they are all in the know. And we have now reached a very strong bullish sentiment at 66.8%, whereas last week it was nearly half of the market. So this has increased significantly. Now here's the thing, usually when we have these news events that are dominating a news cycle, like a war for example, this keeps the price elevated and also really volatile for some time. So the bullishness here is absolutely not a surprise to me at all. And even if we get a little bit of a gap fill, even if we are a little bit hesitant at the start of the week, overall I think more bullishness is nothing crazy. Now you might remember me talking about the sentiment polls themselves, and here the interesting thing is that they are sometimes a contrarian indicator and they are sometimes just a lead following mechanism or algorithm. So how does it actually work in practice? Let's imagine the market is moving in a sideways range. If we, as we are in this price sideways range, getting like a strong bullish or a strong bearish indication, that is usually part of an early contrarian indicator. So for example, at the peaks within the range, we would usually get a very bullish, a strongly bullish indication on the TTF sentiment poll, which would usually lead to a price decline. But when we are reaching the bottom, the market usually gets really bearish, which is often an indication for the market to move up. So within ranges, the Clever Market sentiment indicator is more of a contrarian indicator. But now that for a lot of the markets we have broken out of the range and we are now making higher highs and higher lows, we are obviously in a trend. Momentum following strategies are now probably the way to go. This means that the sentiment tool itself is not that useful anymore because traders, sorry about that, but they tend to vote in line with what happened last week. They're projecting that into the future. So it is more last week's price moves that are influencing the TTF poll if we are actually pushing higher or lower in a trend. So right now I wouldn't put too much credence on the TTF poll. Alright, let's have a look at the markets themselves. We are starting with the TTF front month, NBP front month, TTF front season, NBP front season. We have EUAs, German Power, Henry Hub and Brent. So all of them you can see have moved higher, and today I really just want to focus on the TTF to show you what is happening on all the markets. The only important thing here is that, can you see that the EUAs have made the smallest move out of all the markets? That is fairly interesting. So Henry Hub itself also still not quite making higher highs yet, whereas you can see European energy markets, they're all making higher highs. So the flow of higher highs and higher lows continues. Within Europe, it is the EUAs that have made the smallest move. Alright, let's start with the TTF front month, and here I want to keep an eye immediately on the daily chart. You can see we are now working with this trend line that should offer support in the case of a decline. But for now, no decline in sight. We are seeing that the momentum is picking up again on the MACD. There's no bearish indication whatsoever on the stochastic. So here we are also making higher highs and higher lows. We are seeing that the trend isn't quite back yet. So the ADX is still near 12. We want to see the ADX at 20 before we have a really strong trend going. But we see that the DMI plus is already well above the DMI minus, so it is looking good. We had really strong volume as well at the end of the week, and we are seeing that the 8 and 12 exponential moving averages are also making higher highs and higher lows. So above the trend line, I am bullish, and even like with or without the war happening, above the trend line we are bullish for now, and we have also made our first higher high. So however, do keep an eye on this level here, the 37.94. I think this could be like super interesting at the start of this week. Of course, I went a little bit further and marked out the 38.59 because I don't want to make my trading decision being based just on this tiny level here that's essentially happening immediately, so I just put it up here a little bit. Now we have this like small body with the long wicks that is always showing us that there is a tight balance, the market is balanced, or indecision. So after the big jump, it kind of makes sense, right? The news broke, the market moved higher, the bulls tried a little bit, the bears thought it's overblown, nobody really know where to go, and we just ended up where we started last Friday. Because overall, the bulls are probably taking into consideration the war, whereas the bears are probably more concerned about the immediate European supply and demand balance, which hasn't really changed all that much. So that's why I marked out the range of last Friday to see who's winning out, and I want to keep an eye on that today. So below 36.9 we could easily move towards the support level near 35. Maybe we find a bounce here, maybe a bit of hesitation here, or the bulls immediately continue higher above 38.58. Then I want to say like the psychologically important 40 level, or even the 41.5, the 200-day exponential moving average could become really interesting before even trying the 43. So what's happening this morning is best observed on the hourly chart. So you can see we pushed above the triangle, so we measured the triangle distance here, we applied it to the breakout, giving us a target at well, let's call this 40. So that's why I don't think 40 is crazy. You can see last Friday, after the push higher, we immediately declined. We did get a bearish stochastic signal, and we also saw that the MACD is peaking out a little bit. We see really strong volume on the down leg, which is showing us that the bears are in charge, and overall, I don't know, maybe a little bit more losses, maybe towards 36.9, maybe filling the gap towards 36.4, maybe, who knows. But ultimately, I still do believe that the bulls have a good chance at continuing. So if we want to be a little bit more precise, we can put on these Fibonacci retracements levels from up here to down there. We are now at the 38.2% Fib retracement, right? Can you see this? We corrected lower, 38.2. So this is a shallow correction. I want to keep an eye on this 37.46. If we move below that, I think we could make it towards the 61.8% Fib retracement, which is at the 36.77 euros per megawatt hour, which is close to the 36.9. So the gap boundary here, right? So below this, I think we could make it until here, or maybe even retest this old triangle support. Now do keep an eye on these. Don't go on the hourly chart as you are trying to estimate how low this goes. For this, go onto the 15-minute chart to get a better idea of the flow of lower lows and lower highs, right? So this is my recommendation this morning. Look at the 15-minute charts. A move below 37.46 could lead towards 36.77. If however we do recover, which I think is a little bit more likely, then I want to see a move above 38.62 before the bulls are fully in charge on the hourly chart again. So do keep an eye on the Israel-Iran war, on Ukraine, on anything happening with Trump, just to be prepared for any sudden price spikes, and then use technical analysis to identify how high the price can actually travel. But don't lose track of the more localized supply and demand balance, which is looking pretty okay right now. Everyone, I hope you're having a good start into the week. See you around, and bye bye.